New indicator with an 83% win rate. Has AI really come this far, or are they just feeding us fairy tales again? Today we're cutting through the hype. We're taking Williams %R and checking if it works, as well as people claim. I'm Mr. Golden. I don't believe in magic buttons. So today we'll do a live test of this indicator on pocket option. What is the core of Williams %R? Let's open the platform and activate it. Williams isn't a forecast of where the price will go. It shows where the price is currently positioned relative to its range over recent candles. The upper zone near -20 means the price is closing near its highs and buyers are in control. The lower zone near -80 means the price is near its low, where sellers dominate. The mistake 90% of traders make. Most people see -20 and sell immediately, or see -80 and buy right away. But in a strong trend, Williams can stay in these zones for a long time. This is not a reversal signal. It's a sign of momentum. The real value of Williams lies in the transitions between zones. When the indicator moves up from -80, sellers are weakening. When it drops down from -20, buyers are losing control. However, this only works in tandem with market structure. How will we test it? We'll keep it simple. First, we open the 1-hour time frame to determine the overall market direction. Then we switch to the 5-minute time frame to find confirmation via Williams %R. If the structure and the indicator align, we enter the trade. Expiration time will be up to 5 minutes. Now, I'll perform a series of trades to show you the real picture. I'll speed up the video so we don't drag this out. Here is the accelerated recording of the trades. First currency pair, US dollar and Canadian dollar. On the hourly time frame, we see the Williams %R transitioning from the -20 to the -80 zone. This is confirmed on the 5-minute time frame as well. This is a clear sell signal. We execute a 3-minute position. Remember, we are keeping expirations under 5 minutes. Looking at the result of the first trade, unfortunately, it closes in a loss, but we continue to analyze. Returning to the hourly time frame, the indicator still points to a transition from -20 to -80. The 5-minute chart confirms this as the indicator is actively moving. So we sell again for 2 minutes, and this time it pays off. The position closes in profit. Continuing the analysis, we go back to the 5-minute chart. There is still room for movement, meaning the price has a certain range to fulfill. Let's select a 3-minute expiration and sell. I'm testing different durations to keep this process as transparent as possible. Second and third positions also close in profit. Let's switch to another asset, British pound and Canadian dollar. Here we see the same Williams %R transition from -20 to -80 on the hourly time frame. On the 5-minute chart, this is already confirmed, meaning the indicators are synchronized. We execute a 2-minute sell. Let's look at the result. It's also positive. The position closes in profit. Let's keep going. Let's look at the 5-minute time frame. There is still some room for movement, but it's quite short. Therefore, I'm taking a 1-minute sell on the 1-minute time frame. Let's watch. As we can see, the asset continues to sell off actively, so I feel fairly calm about this position. Although, perhaps I shouldn't have been. We see that the position closes in a loss. No big deal. Let's move on. We are switching to the hourly H1 time frame to see if there is still potential. We can see that it's no longer there because the indicator failed to cross from the -20 to the -80 zone. On the Euro-Canadian dollar, we see a more active picture. The indicator is actively moving from -20 to -80 on both the hourly and 5-minute time frames. Therefore, we enter a 2-minute sell. Let's switch to the 1-minute chart to monitor the execution. As we can see, sellers are trying to push the price down. The indicator is signaling this actively, so let's track the result. This position closes in profit. Let's go back to the hourly time frame to double check. We see that there is still some momentum potential left, moving to the M5. Similarly, we see that the transition from -20 to -80 is not yet fully complete, so there is still potential here. We open a 1-minute sell. Why 1 minute? Because the price is already quite close to the -80 zone, meaning the transition is almost finished. Let's watch the result of this trade. As you can see, Williams R is performing quite well right now. Let's see what the final result will be after 10 positions. Let's follow it. And this position also closes in profit. Congratulations! Now let's check the hourly time frame again to see if there's more potential. Basically, there is. But let's look at the Euro-Swiss franc, for example, to keep things interesting. We see an active move from -20 to -80 here, meaning the price has already dropped below the green line. However, on the M5, the price has already reached the red zone at -80. Consequently, a sell is not possible here because the indicator is not synchronized across time frames. Looking at another currency pair, for instance, the British pound, we see a transition from -20 to -80. However, on the 5-minute chart, this is again not confirmed because the price has already completed its key move. Regarding the Euro-US dollar, we now see a transition from -80 to -20. Long positions are likely. We see confirmation on the M5, structural synchronization in a bullish direction. Therefore, we can choose a 3-minute expiration and buy. Let's switch to the M1 time frame to track the trade. As we see, quite an active buy is happening. A very confident position, yet it closes at break-even. That happens too. It's normal in the currency markets. Back to the hourly. Nothing interesting here. Let's check other assets. Let's see. British pound, Japanese yen. There is a sell signal. There's a transition from -20 to -80 on the H1. The price hasn't confirmed it yet, but it's very close. In this case, I will use the M5 time frame for confirmation, choosing 2 minutes and entering a sell. So while the indicator on the hourly chart didn't point to a full sell yet, it was strongly leaning toward it and was close to the transition. Therefore, in this situation, I decided to trust the M5 time frame more. And what's the result? This trade closes in profit. Excellent result. Back to the hourly. Nothing interesting. We won't risk it further. Let's pick one more asset. It could be the Euro-Australian dollar. There was recently a transition from -80 to -20, which is a buy signal. On the 5-minute time frame, a transition from -80 to -20 is also occurring. Accordingly, let's pick a 4-minute expiration for the example and go for it. As you can see, the main goal in executing positions is specifically the synchronization of the H1 and M5 timeframes in the same direction. However, this doesn't always work out. Here, we take a loss. That's fine. Let's look at the overall statistics of our positions. As we can see, 7 positions closed in profit, 2 positions in loss, and 1 ended in break-even. This shows a 70% win rate for the indicator. It's not magic, and it's not 100%, but the result is more than viable. Conclusion: Williams R is not a magic indicator, but if you use it wisely, alongside market structure and multiple time frames, it truly gives you an edge. I realized one thing a long time ago. Indicators are tools, and without them, profitable trading becomes nearly impossible. I post more working examples, strategies, and live tests on Telegram. Join in, use them, and share your results in the comments.